Morning, friends. I've put together a small presentation on Futures Future, in particular, Future Consumer Limited, which I believe is a good business to invest into. And I'll try and explain my perspective in this short deck. Future Consumer Limited trades as F Consumer on NSE BSE. The last traded price in NSE was 1.95 rupees and BSE 1.94 rupees. The short-term target from my perspective is 3.4, and that represents a 70% upside from where it is now. Four reasons to consider buying. I've split them up into the NCLT angle, sales angle, organization angle, and my angle. So first, the NCLT angle, which seems to be the largest concern for most investors at this point in time, and the big elephant in the room as we speak. Let me cover that under four pertinent points. The first point is that a subsidiary company is treated as a separate legal entity under the Company Law of 2013. Uh, that veil is only lifted if uh, amalgamating it with the group company does not subvert public interest. So in this case, it will, because the shareholding is of FCL, the highest holding is with the public. So that is not the intent of the IBC. Uh, in fact, there was a government directive that NCLT should be the absolute last step for any organization. Further, in the IBC, Section 36, Clause 4 excludes the assets of a subsidiary company from the company in question or the company under NCLT. It does not automatically become part of the NCLT. A reappointment of an NCLT resolution professional needs to be made for each company within the group company. Liquidation of assets means the assets of the subsidiary company are demarcated from that of the parent or uh, the company that is currently under the lens of the NCLT. In the unlikely event of a group insolvency, as per the IBC mandate, Section 18, Clause F, it is only to the extent of the promoter holding in the subsidiary company. In this case, it's about 8% of the stock holding of the promoters in FCL, which is roughly about 40 crores for a 400 to 500 crore company. As another fallout, which is positive for FCL, is that if FRL does go to NCLT, then FCL is not obligated to supply its goods to FRL, which essentially means that FCL is then free to take all that merchandise that it was giving to FRL and supply it elsewhere and to paying customers. So customers like Reliance Retail, um, uh, Nilgiris, any other Aadhar, any one of these stores which actually pays back FCL. FRL is one of the biggest defaulters in terms of payments to FCL. So FCL not being obligated to support FRL in terms of supply of goods is a positive. I'll take you through the sales angle. I've done a lot of research in terms of brands under FCL, and every other brand is available online, in stores, in a few places, but uh, except for Swiss Temple and Sunkist, which are JVs. There are a total of 4 JVs, and 2 of them are Swiss Temple and Sunkist. Every other product is available uh, with FCL, being produced by FCL. It's growing sales year on year. Its revenue from operations for 21-22 was 6,196 crores, 5% higher than 5,899 crore for the last year. Another positive from a sales perspective is that Samson Samuel is appointed as CEO. He is known for turning around companies in terms of revenues and profits, and he's a far more seasoned salesperson than Ashni Bayani, with all due respect to her, but he's a far better salesperson and business man for FCL. And him accepting the offer and FCL making the offer are two very pertinent points because both parties are in agreement that something good can happen in terms of sales. I'll take you through the organization. I will continue on the point where Samson Samuel is now the CEO, and we've seen the turnaround in Nilgiris after he took over, and it's very possible that he can do it for FCL as well. Appointment of Amit Kumar Agarwal as per the circular. He's played CFO roles, and he's known for cost cutting and turning around business in terms of cash positions and profitability. Another encouraging point is that FCL employs less than 500 people, which means their employee costs are low. The only staring cost at this point in time is their interest costs, and I will take you through a few points that can alleviate that concern as well. Reappointment of statutory auditors, same auditors for last year become auditors for this year, which essentially means both the auditor and the company are comfortable. Um, it is always a red flag when the company changes the auditor or the auditor refuses to audit the company's accounts, which is not the case here. Strong cash flow generating ability of the business, as you know, FMCG is high profit margin business, which is kind of stunted because FCL was supplying to FR, which is non-paying customer. But if it does start supplying to the Reliance Smart Stores, continues its online presence and increases the brands within Nilgiris and Aadhar, we have a good case for the company to grow their sales, and even at a modest 10% kind of a net profit margin, the company should be profitable pretty quickly considering they're doing about 6,000 in sales. Okay, this is my angle based on the research I've done. So while most of the FRL stores that I visited in Bangalore seem kind of run down, they don't have the infrastructure they used to have. Goods are just kind of on the flow, and there are fewer salespeople taking care of things. I have noticed that and it actually seems like a clearance sale, but it's not because I've observed, noticed, visited several times to see that they do get fresh goods every single day. So the supply keeps coming. They're just kind of keeping it low key at this point in time because of the uncertainties around it. But sales for the FCL brands continues to happen. And if it doesn't happen, that a Reliance Smart, and I hear that it's going to be called Reliance Signature when they reopen, are already stocking FCL products. They're going to continue stocking FCL products, which is a great thing for FCL because now instead of supplying to FRL, which is a non-paying customer, they're going to be supplying to Reliance Retail, which is going to be a paying customer. So in effect, there is really not too much of an impact on FCL except for the stores that have been absolutely shut, which I believe is not a very big number. 900 odd stores got taken over. 800 odd stores still continue to operate low scale. The final point is that if you look at FIIs through this turbulence which has been happening, and FIIs don't normally get into sticky situations, sticky stocks. But if you look at the first 3 months of the year, Jan, Feb, March, they've actually increased their holding from 10.25 to 10.37, while in most other future groups their holding remains the same, or they've actually reduced their holding in that quarter. Neither has the 10.37 come down after March and after the Reliance future deal fell through. FIs still haven't sold, and typically FIs sell indiscriminately. Uh, they don't really care. It's just kind of basket selling that they do, but for some reason they haven't sold in FCL. Um, and it's in the first 3 months, it's not just a question of averaging, right? It's not that FI is buying more to average their price, but in fact, they added four new FIIs who bought into Future Consumer Limited in spite of the history that's been going on for 2 years. So that is a definite positive in my mind. Uh, Finally, I do hold FCL shares in a personal capacity, but I do not represent an organization. And These are not recommendations to buy, but just my pure analysis of the stock. Please do your own research and invest responsibly, not beyond what your um, capital permits you to. And thank you very much. I hope this has been helpful. I will post new videos on the others shares that I'm researching. And thank you very much for your time, and I hope this helped.